evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for a pretty volatile Tuesday, and we're at the 17th of August, 2021, just after 6:30 p.m. Central Time. Now, before I get anywhere in this, tomorrow, I'm not holding my live webinar. I'm doing it Thursday. We had a computer glitch on my side. I had an SQL server issue, if you know what that is, and we got it all repaired today, but it was necessary for mailings and so on that we do. So I've just put it off to Thursday. I sent the invites out. If you didn't get one already, click up here. You'll see this icon. You can register. Now, do me a favor. Before I get going, send me your questions. When you register, you're going to get your confirm. You need a password to come in. It's all there. Read what it says. Tells you my email address. Click on it. Send me the questions you have. Let me prepare the charts for you. It makes it a lot more fun. All right. So today, a couple of things. Number one, the news is overcome by the tragedy in Afghanistan that is going on and the U.S. mishandling of this whole thing. The second thing that is going on is the COVID, and it is spreading and it is rampant. They locked down today for 3 days, New Zealand again. They had one case, full shutdown of the economy. They were supposed to have a central bank meeting tomorrow that was talk about raising interest rates. Don't know if they'll do it or not. But the news was just kept coming in. We saw retail sales were at best not good. How's that? I thought they were a big mess. Now, that doesn't mean people aren't moving into service spending. They are. They're going to restaurants and the like. The problem with COVID, tonight in Chicago, they've issued a mandate. You go onto any public building. So you want to go to your grocery store. You want to go, it's probably even retail shops and all. They'll be considered public buildings. If they got a roof on them and people are in them, that's what they're going to call it. It's not a private club. It's that. You have to wear your mask. So we're back to that. You want to come to Chicago and race in the marathon this weekend. It's our 43rd one. And they run right by where I live here, so I'm always watching that each year. The fascinating thing is you have to have either been vaccinated or 3 days prior to running a proof of vaccination. This is just here. What are you doing in the rest of the world where it's poor also? So that's it. President Biden, I understand they're talking of a third shot for the Moderna and the Pfizer vaccine people 8 months after you've had your pair. It's not formal yet, but the word is it's going to come down the chain any moment here. So that's where you're at, and it all weighed on the market eventually. So let's go into the charts and see what it did. For the week so far, you're into Wednesday's trade now. You're down 0.58%. Certainly not a big drop, and nothing damaging yet on that chart. Here's where the damage came in. This is how the market looked yesterday, Monday. This is called an outside day up. The one thing I don't want to see on an outside day is taking out that day's low. And when you do, markets often make a run for the closest main moving average, which is often the 18-day average of closes. You can see what the market's done there. When I put on the swing line, I have a higher high. Now I have a low that's under that low. So I've stepped out of the trend on the swing line. Prior to that, we had these higher lows, higher highs that never seemed to end. You got your first correction. Where did the market stall and come down to? The 18-day average of closes in red. Very typical classic. Now, what about the resistance? Well, that's the Bollinger Band, and it certainly did its job. You cannot say it didn't do it. If you bought back in today, I know there's pain to that on the break, but it let you out right where it should have let you out if you're a Bollinger Band theory trader, as I am. The second thing is you lost momentum, but when did you lose it? Let's go to the close on Tuesday. There's Tuesday's close. Both numbers are still embedded. They're losing it early in the evening tonight. Early in the evening doesn't count. You got to be later in the day to know if it's going to stay lost. If this market were to have a good size rally and start challenging the upper Bollinger Band tomorrow, which that number's 44.74, if I'm correct, yeah, that's where it's going to be at, right up there, 44.74. Could it re-embed? The math is there. We'll see if that happens or not. In the NASDAQ, lower highs, lower lows, and where did the market finally go? I want you to look at the 18-day average. Look at the Bollinger Band with it. Market went to the Bollinger Band and stopped right there. It has not had that embedded reading. It has been a market that's been overbought. It has had the pattern of lower highs, lower lows, and it finally hit a target, excuse me, on the downside. This is where I think the pros covered their shorts. In the Dow, higher lows, higher highs, just like the S&P. You had outage up there. In other words, people could have come out of the market. Did the market have an outside day? No. This market just had a higher high day, fully embedded reading. On the close today, did it lose its reading? No. So it's losing it tonight, but that can be made up. So the question is for tomorrow, what do you do? Well, you'll get some traders that if they bought today, they'll get nervous and they'll say, I think I'll just get out if I can get even. Others will either say, I'm caught, I got to get out, or the other group, hey, each time it's come to that 18-day average, if you bought it, this market has paid you back in spades by making a profit, a higher high. I don't know. In the Russell, higher high, lower low. Again, first challenge of a Bollinger Band. I teach this in my enhanced course. Why? I show it all. I think the pros came out of any shorts they had, but I don't think there was a reason to be short or long coming in. In the 30-year bond, we have a pattern. If you look at it, this is not a swing line yet. The real swing line is the higher high, lower low. And here too, I just want to take you to this outside day. If you take out that low, you're looking for the 18-day average of closes. It's got to be done within a certain time frame. That met it. After that, whatever it does, it does. But that was the goal there, and that's how you start playing with those. Inside days are fun. They happen a lot. And if you learn how to work with them, that can be an interesting method in itself of how do you put yourself into a position for what we'll call these swing moves. The cash, you went up and you challenged the upper Bollinger Band. So you didn't hit it today. You missed hitting the lower band yesterday by 1 tick. Today you missed hitting the upper band by, 9 ticks. So we'll see. I wouldn't be surprised if you're just caught here. You're certainly not trending in the VIX. And each time that VIX has gone up and people have bought that insurance, shortly afterwards, I want to come back to that, the market just comes cratering in, and what do the stock indices do? They rally again. So is that going to be considered enough of a rally since it went to the Bollinger Band? From my point of view, it is. So I'm looking for tomorrow, get some legs on it. I mentioned yesterday in the stock indices, I wrote it in my newsletter. As feeble as the gains were on Monday, we had Monday gains. You often get a break on Tuesday. I didn't think it was going to be this size break, but it was the break. In the 10-year notes, you are stalled in the middle of no man's land. The line in the sand from the upper to the lower Bollinger Band and just sort of stuck. You're not trending. What are you doing in the dollar index? You have higher lows, higher highs, target 93.32.5. What the bulls don't want to see is the low of 92.47 taken out, and you are overbought. So I think if you do go higher, you're going to see some healthy profit taking. In the eurocurrency, the trend is down. Oversold. If you go to the lower Bollinger Band at 116.82.5, I think you'll see a lot of short covering come into the market. British pound, I think the short covering hit today. First time you hit a Bollinger Band, you often turn away. You hit it today, I won't be surprised if it turns away, especially when the market is oversold. In Bitcoin, you fell back into support, but you did lose today. Here you are with the embedded reading, both numbers over 40. Today, over 40, barely hanging, oh, did I say over 40? Over 80. Barely hanging in there. Tonight you're losing it. Well, just like the stock indices, you can lose it. Are you going to get enough power to get it back? Let somebody else carry the ball and we'll find out from that. In Brent versus WTI oil, Brent continues to gain on the WTI, but does that look to you like a bullish chart? I don't think so. Lower highs, lower lows into the 100-day average and holding, and you're oversold. I'm sorry I left that cursor up there. Lower highs, lower lows in the WTI, same. I'll let somebody else carry this the rest of the day. Same thing in the heating oil if you look at it, and the nat gas. In other words, I think the big moves in some of these markets came to an abrupt end. So again, if you want to join the webinar Thursday, I open at 12:15. It starts promptly at 12:30 p.m. You click on the icon up here and you can sign up that way and write me your questions ahead of time. I'll see you all Thursday.